Welcome to the Allo.Capital podcast. If you're just joining us, we're doing seasons. This season, we are summoning Allo.Capital, a new spin-out from Gitcoin that is designed to build the capital allocation layer of the tokenized internet. I think there's big upside here. Capital allocation is a multi-trillion-dollar design space with VCs, governments, NGOs, and DAOs all having to allocate capital to survive and thrive. But it's also a place we can start small. Every time you spend money, you are allocating capital. We are threading a through line, partnering with builders, researchers, and funders to figure out what on-chain post-AI capital allocation will look like, building it on-chain. If you want to learn more, you can visit our website at Allo.Capital, where you can download the Allo books for free, play with some of our dApps, or join the Telegram or participate in the DAO. My guest today is Devansh Mehta, who is lead AI public goods and governance at the Ethereum Foundation and also a former Gitcoin contributor. I'm excited to have him back to talk about deep funding. Deep funding, if you caught any of the episodes that we did with Vitalik, Devansh, and Sybil last winter, is dependency funding using info finance. Info finance is the use of financial incentives and markets powered by blockchain and AI to generate, validate, and surface reliable information for public benefit. So how can we use info finance to fund our open source dependencies? How does that close the loop between profit centers and cost centers in Web3 networks? And what is the upside here? That's what me and Devansh play jazz on today. I think this was a fun episode. I think you're going to enjoy it. Hey, Devansh, how's it going?
Yeah, it's going great so far. Just came back from a long visit from ECC, so really full of like all these conferences are a way of us to share our learnings with each other, and so I just come back knowing like what the latest is.
Yeah, that's a great segue into my next question. I know that you presented some updates on deep funding at ECC, and was hoping you could take us into deep funding. What is it? And what are the latest updates on deep funding as of July 2025?
Yeah, sure. So basically, the current version is that we are running the competition until July 25th. So anyone who's a model builder, please look at cryptopond.xyz and submit a model to predict weights in the Ethereum dependency graph. And it's basically, we've got like a preliminary version of the weights. Like if the competition ends today, we have some division of repos, which I can share with you guys shortly. So I think that's where we are right now, that, okay, we have this competition, we have these weights, and now like, what do we do with the weights is something that we've been chalking out over the last 1 month.
Deep funding, obviously the brainchild of Vitalik Buterin, and a new category of public goods funding that has been in the info finance category. There's really been a breakout, I think, exciting experiment for everyone to follow over the last 6 months. In December of 2024, you and Vitalik and Sybil joined the podcast in order to talk about the initial pilot of deep funding, which, if I recall, was mapping the dependencies of various open source repositories, and then basically allowing a Kaggle competition in which different bots could go through and weight the dependencies of those repositories, and then that would be matched against a jury, and basically that would be the form through which you would reward the AI ML bots of dependencies in the graph. Did I get that right? And also, how has that evolved in the last 7 months since actually going into implementing the experiment?
Yeah, I think you summarized it like pretty well. So the kind of the three parts, one is getting the unweighted dependency graph, like what is the eligibility of all the open source repos. The second, like you said, was a competition where anyone who's an AI developer can submit their predictions on what the weight should be. And the final component is a jury, which gives a rating for a subset of these repos in order to select the AI that can then give to all of them. I think the broader idea is that humans are good at making decisions, but we can only make a few decisions. AI is good at making many decisions, but we don't know if the AI is aligned or not. So is it possible to use the few decisions that we make to select an AI which is most aligned with our preferences? And that's
This is
really, yep.
what Vitalik calls distilled human judgment, if I recall.
Yep. And like how AI can be the engine and humans can be the steering wheel. Yeah.
Yep, that's right. I think that those have been two memes sticking in my brain from Vitalik's blog recently, and we're sort of exploring the broader category of info finance. How can how can blockchains be used in order to create information signals similar to how we have pricing signals in markets, but in a broader landscape of what's possible. Um, so uh, so yeah, I mean, it feels like we're exploring the category of info finance here.
Yeah, I wonder, like, what would you define as info finance? I think it's like, as a philosopher, we always say start off with the definitions. Yeah.
Yeah, I'm not sure. I'd have to pull up Vitalik's blog posts.
Yeah.
What would you say?
Um, I think it's a way of surfacing news and content to an audience through like financial means. Right now, if I see a tweet, it's because it's got like a lot of likes, a lot of engagement. So that's like non-financial ways of actually making things go viral. But info finance is really like make it like financializing the process by which things go viral. So maybe things like Kaito, which, like, you have a leaderboard and you can pay people to be on, like, who are the top people in the leaderboard. That's one example of info finance. The fact that I can see whether, like, the probability that the Venezuelan election was rigged based on a prediction market on Polymarket and how much people are betting. That's again another example of info finance. So I really look at it as the way of like financializing virality.
According to, I just pulled up Vitalik's blog post, and it says info finance is the use of financial incentives in markets, often powered by blockchain and AI, to generate, validate, and surface reliable information for
Mm.
public benefit. I feel like that's
Right.
a nice, concise cherry on the top.
Yeah, definitely. Yeah.
Yeah. So, tell us, we're in the home stretch of the deep funding pilot. What's going on now? How has the experiment
Yeah.
evolved? What have you learned? And what's next? How can the Allo.Capital audience help out with the deep funding pilot?
Yeah. So maybe like a show don't tell is like a good philosophy to follow here. So if the deep funding competition ended today, these are some of the weights that all of these different repos would get. And I think, like, taking a step back, we've seen like Protocol Guild like finds it very hard to actually give different weights to contributions. So they use a formula called time weighting, where the longer you've been contributing, the more weight you get. But kind of something we've seen is that even if someone contributes for a lesser amount of time, they can make a much larger impact. So how can we actually get unequal weights between eligible projects or people, but still do it in a legitimate and fair way? So here is like kind of an example, like, so something like Prism is a consensus client on Ethereum, and it has a weight of around 6.3%. So if you gave money into these repos, about $6.3, like out of $100, 6.3 would go to Prism. Something like Nethermind is around 3.5%. So like $3.50 would go there. So we've actually managed to kind of create, like, I mean, we've sent this to a lot of jurors to see whether anyone feels any of these are overweight or the weights are not fair. And I think the two things we've got are that Web3 JS was actually proven to not be like, they aren't active anymore because some of the other repos have overtaken their position, but they've still got 2% over here. So that's kind of maybe one indicator that the weights aren't accurate. And the second is that people have also said Prism being 6.3 and Nethermind being 3.5. Like, basically, Prism might be overweight relative to the others. But other than that, I think we've got a great like feedback. Like, for example, if you look at Solidity, um, where is like here, like Solidity is around 14.6%. And if you look at Viper, it's around 1.5%. So when I shared these weights with the people at Viper and Solidity, they said, yeah, these weights make a lot of sense because on a rough estimate, like about 10x of the active smart contracts are Solidity compared to Viper. So like these numbers made sense to them. So I think like it's been a good reception we've got so far overall to these numbers. Um, and no one has been like, this is outrageous numbers, like these don't make sense at all. So I think it's like a promising first step that we actually have an unequal division between various repos, which people are not throwing a revolt over yet.
the benefit of our audio listeners, Devansh is sharing a screen right now and is showing a list of GitHub repos and the weights that have been submitted to the deep funding contest for them. Is this a specific agent that has submitted these weights, or these are the composite weights across all of the agents, Devansh?
Yeah, it's a composite weight of all the agents based on a scoring script written by Vitalik, where rather than just choose a single agent, we see which agent is performing the best on which repos. So, for example, in like Chef tooling, it might be Avoki's agent which performs the best. But for clients, it's my agent. So, what Vitalik does is he combines Avoki and Devansh's agents, and it actually gets a weight which is like more accurate than either of our agents would be individually. So, I think that's kind of the exciting design space in AI, that how can we create ensemble models where different agents are good at what they do in their own niche, but we can join them together to create this like meta AI, which is composed of each of the individual AIs. So that's kind of a simple script of it, which we are seeing the weights of over here.
Your insight that different agents are good at different parts of the dependency tree is really interesting. It reminds me of learning about the architecture of LLMs and how you have these sort of orchestrator agents that will delegate down to different intelligences for different types of problems. I'm saying intelligences, but I mean LLMs here. So the answer is not one agent to rule them all. The answer is maybe like an orchestrator, which it sounds like Vitalik is in this scenario, and then a bunch of sub like agents that are good at different parts of the dependency trees. Did I play that back right?
Yep, you played it well accurately. Yeah.
Yeah. Okay. So where are we in the contest right now? We're recording on July 8th, and where are we now in the contest, and what's next?
Yeah, so I think the contest ends on July 25th. So we have roughly 2 weeks from the time you're hearing this podcast. And it's not very difficult. Like, just get an agent, run it across the graph, get some weights, and submit it. It's like a cool experiment. And you can also win some of the prize money from Vitalik as well, which he's put towards accurate models. So I really urge everyone that it's like the home stretch now for like this initial pilot of deep funding. We've already got some we've already got some good weights. It's already been kind of what I would call a success so far. The pilot, even if no other work happens now, I would still say this is a decent job that we've done. Um, but like really being able to get more AI people involved and get more of the community involved in this, I think that's kind of what we should really be striving for now.
Yeah. And what specifically are you looking for from the community, and how can they contribute?
So I think we see a lot of the community working on their own strands of AI. So we have like DeepGov, which Gitcoin was helping pilot earlier in the last round. Um, and so basically using this competition as a way to bring together all of these different experiments where, hey, if you've already made an agent to do some form of capital allocation, like let's test the agent in like a real world setting. Let's see how well they actually conform to like the human jury data. So I really hope that like this experiment can bring together all of the different AI agent builders and like just get them to submit something and test out their agent against some real data.
Yep. So I'll have a link in the show notes to where you can do that if you're building AI agents, how you can get involved in the contest. And it sounds like you got about a week or two to do so, and there's some prize money from Vitalik and some glory in it if you get a good score. Take us past the end of the pilot here. What's next for deep funding? Are we going to be using deep funding for other dependency graphs besides open source software? We're going to be using it for different dependency graphs within open source software. I know that you're sort of working with Vitalik on a lot of things these days. What's over the horizon after this pilot is over?
Um, so I think like the main limitation we've identified in this pilot are twofold. The first limitation is that anyone can basically Sybil attack the contest. It's possible, like there's this funny thing in philosophy where even a drunken monkey can type a work of Shakespeare. It'll just
Mhm,
keep banging the keyboard and eventually it's going to produce a work of Shakespeare.
mhm.
So I think it's a
So,
similar situation. Yeah, go ahead.
so this attack vector would basically be, instead of actually building an agent that is really good, I just basically do a parameter sweep of all possible agent configurations and submit them all to the deep funding contest. Is that the Sybil attack vector that we're talking about here?
Yep, it's the Sybil attack
Okay.
vector here. And the reason it's so dangerous is that um, basically in machine learning, there's an important element of testing for generalizability. That if you have, say, 100 data set, like 100 rows of data, you can build a model which performs well on those 100 rows. But if you give it 50 additional new rows, it performs very badly. So that's kind of the main thing to worry about, that it's overfitting on the past data and it's not able to generalize to the new data. And when people do this drunken monkey sort of attack, it's like it performs badly on generalizability. That's the worry.
Okay. So, taking me back to the question of what's next in deep funding, it sounds like solving the drunken monkey, but I'm going to start calling the civil attacks,
Yeah.
drunken monkeys. That's fun.
Yeah.
It sounds like that's another thing that you're working on. What's after that?
Yeah, so that's one problem. And the second problem with the pilot as we've done is that it's kind of like similar to fresh fruit. We've got the weights between these repos today, but it actually like it becomes more and more irrelevant with every day that passes. Because these weights are relevant today in like July 2025, but unless we do another such contest, it's going to become irrelevant in like a year or two. So how do we actually make it a continuous sort of updation of weights in real time, and we don't just make it like a one time, like this is valid on this date, and then we have to run another competition in a year in order to make it valid again. So how do we actually make it a continuous game or an infinite game rather than a finite game which stops at a predetermined time? So I guess those are the two problems to solve, like the drunken monkey where anyone can submit a lot of models, and the fact that we want to make the weights into a sort of FMCG product which is evergreen and always relevant and always updated in real time, compared to fresh fruit, which deteriorates with every day that passes.
Fresh fruit rots after a couple days. I think that's the analogy there. What is FMCG? I think you said an acronym there.
Yeah, that's like fast moving consumer goods.
Oh, I
So,
see. Okay,
yeah.
got it. And so if I play this back, it sounds like the problems to solve are the Sybil problem and then this problem of the weights getting out of date. And, why are those the problems to solve? Is this the way we're gonna be funding public goods and open source software in the future? And in order to realize Vitalik's vision of funding open source software through this, having an ongoing solution to those 2 problems is necessary? Is that the sort of the why behind the what and the how here?
Yep, and I think like even taking a step back, something which which we'll need to figure out in order to compete with Web 2 is how do we integrate our profit centers and our cost centers? And what I mean by that is if you look at something like Twitter, they have a cost center, which is community notes, and they have a profit center, which is their ad division. But the ad division gives money to community notes without any dominance between them. Because you have a C suite, which takes money from ad division, gives it to community notes, and the ad division can't do anything about it really. And that's actually good. It creates a better end product for the consumer. But if we actually apply this same analogy to the Web3 movement and to open source movements in general and open networks, it breaks down. Where you might have a profit generating center like Aave or Uniswap or Lido or any of these or Curve Finance. And you have different cost centers like Viper and Solidity and Go Ethereum and all of these other repos, but there's no actual way to let the profit center fund the cost center without dominance, without one of them begging with folded hands saying, please give us arms so that we can continue our work. So I really view all of these experiments as a way to integrate the profit and the cost centers in open source networks, which we need to do if we are to actually compete seriously with Web 2 products. So that's kind of why it's important. Like ideally, anyone can spin up their own dependency graph and get weights in a legitimate way between these different dependencies. And then they can channel revenue programmatically towards those dependencies. So that's kind of the end goal which you want to get to.
Okay, so the loop is between production and consumption. Basically, you've got a blockchain network. It's powered by open source software. Right now, we've got a mechanism called block rewards, which is really great at rewarding the validators of the network that are running that open source software. But we don't have a way of completing the loop because we don't have a way to reward the people who are creating that open source software, because open source software is hard to monetize, free agent problem. We can't, sell it as a SaaS model, stuff like that. And so basically, deep funding closes the loop between production and consumption, because in blockchain networks, you've got the validators running the software, but you don't have any way of rewarding the software. Anything you would challenge there? Did I play that back right?
Yeah, I mean, the one thing I would challenge is that even like projects like Uniswap or Aave and others might have their code be open. So it's more about revenue generating versus production or consumption, because all of these are open source. Optimism has an open source stack, but it is earning revenue through its sequence of fees.
Right.
Solidity is open source, but it's not earning any money, like the repo Solidity.
Okay.
So
So, I mean, if this is maximally successful, are we replacing open source foundations that are right now writing the software for every L2 or DeFi protocol with just basically deep funding, and then, maybe adding some financing on top of that? If the deep funding is retroactive rewards, then maybe we need some proactive financing in order to get these projects off the ground. But I mean, this sort of replaces the centralized company and the foundations that are writing the software for these networks someday if you're maximally successful.
yeah, I guess like that would be the end goal, that we reduce the role of individuals and committees and other things to decide what to fund. And maybe I'll give the example of libp2p over here. So libp2p recently spun out and has been seeking funding from the ecosystem. And one of the teams they approached was Celestia, saying that, hey, we spun out and we need money, and can you give us some cash? And Celestia basically kind of huddled together and they said, okay, like libp2p has saved us about 2 years of engineering time. And it's not like the fun engineering, it's the painful engineering of
Right. The
networks.
plumbing.
Yep. So they basically did decide to fund them, but kind of like it was a lot of friction. Like they weren't happy with how they were approached, and kind of it took a lot of overhead on their part to figure out how much to give, and like, how to give it, and like it required that kind of a thing. And like, so I think like if we can actually make that process much easier, that every project which is using libp2p can include it within their dependency graph, and some of the money just goes there, it would actually save a lot of time of the executives who have to debate a lot and decide how much to give that repo. And I feel like that's like the benefit, that we can make it much more, we can make it much less expensive, because executives' time is really the most expensive resource there is.
So having something like deep funding out of the box and standardizing a norm that percentages of these networks go into deep funding just basically saves us all the overhead of grants. Dare I
Mhm.
say it, as someone who's been in charge of administrating grants in the past, but grants are sort of an old world way of funding what matters. We're looking for a new way that's more effective and less overhead than grants.
And I think like the one pressure against this is that I've started to see the space in general become more transactional. That what are we getting in return for the money that we're giving? Like what are we uniquely getting? So if like something is helping everyone, then people are now approaching it from a more transactional point of view. That like, what specific benefit do I individually get? Like, sure, I'm using it, but so are other people who are not paying. And so
Yeah.
that's kind of the one headwinds that we might be facing, the kind of thing. So that's what a lot of teams like Argot Collective, which recently spun out, it has like 5 repos. So when they approach like all of these teams which have spun out and are open source, are thinking that what sort of advantages or benefits can we give our funders without compromising our neutrality and our independence and all of these things. And that's still an open question, but it's basically what everyone is trying to figure out now. That like if optimism funds Solidity, how can the Solidity team reciprocate that favor to optimism in some way without it actually compromising or giving them undue influence and all of that?
Yeah, it's an interesting challenge, and it feels like this is an inevitable challenge given the way we're modularizing all of our software and breaking it apart into all these different separate boats. And then everything is available. Oh, not everything, but a lot of things are available as open source software. So you've got this free rider problem, which is, why would I give back to this when I could just free ride on it uh and get it for free? And maybe there's some sort of like moralizing or cultural pressure to support these things,
Mhm.
but
Mm.
the real question is, what's the tangible benefit that can be given for funding something with defunding or any other type of funding? But how can we do that in a way that doesn't compromise the neutrality of the network? How does giving something back not be seen as sort of like a bribe that affects the roadmap or something like that? And that feels like
Mhm.
a hard set of challenges to solve. What solutions or categories of thinking are you excited about in with respect to solving this? I guess a tangible way of asking the question would be, say Gitcoin funds deep funding for everything that it's funding, and that flows down to a bunch of different projects. What could we expect in return? Is there some sort of like contributor NFT that we could get back? Is there any other thing of value that could be returned to us without compromising the value of the projects beneath us? What categories of solution are you excited about here?
Yeah, so I think like there's like the short term answer and then there's the long term one. So the short term answer is basically that um like as like a product builder, it's always good for you to talk to your users. I mean, it's something you should be doing regardless of whether they are paying users or not. Anyone who's using a product, you should basically be talking to them and seeing how you can improve it to serve their needs better. So at least what I've been proposing to a lot of people asking these questions is that people who include your repo in their dependency graph and who fund you in some way, you should basically give them synchronous time. So you can ask them that, hey, what changes do you think that we should make to our product to make it more relevant to your needs? Which is again something you should be doing anyway as a user. And like people who are not contributing or not paying you, like you have only limited amount of time that you can have for synchronous calls, but you basically engage the larger community through asynchronous means. So assume that like Gitcoin includes in their dependency graph like my project. Because of that, I am always available for a walkie to talk to and like to say that, hey Devansh, I actually need this change, which would like unblock me and a lot of other projects as well if you do it. And and that's good for me. Like I want to know what my users actually require and what they want, and it helps me to build my product in a certain way. Then I'm going to basically go on Twitter and say something like, hey, I spoke to some of the users of my product and they suggest XYZ change. And that allows the community, which is not able to have a synchronous call with me, to also come and say, hey, that's a terrible idea. Hey, this is good. So even if someone then points and says, hey, Devansh made this change to the project just because a walkie is paying him and asked for it, I can also say that, hey, I also wrote about it publicly, and a lot of people who didn't pay me could also weigh in on those changes before it was made. So that's kind of the short term answer on what I've been telling teams, that teams that are paying you, like be available for a synchronous call with them and be available asynchronously for the larger community. Because this is something you should be doing. Like all the YC advice and everything is saying talk to your users. So it's something you should be doing regardless. So that's kind of the short term answer of what I'm proposing. And I think the longer term answer basically goes back to licensing. I don't like software licensing. I don't know if you all saw the recent blog post which Vitalik dropped around 24 hours ago. It's basically about how he's changed his mind from MIT being the license that he prefers to GPL being, or like copyleft being his now favored position. And the
Mhm.
reason is that with an MIT license, I can basically um, create it as an MIT license, get money from an investor, and then make it proprietary. So I can fork the MIT repo and start making it proprietary. But with a GPL license, like any code which I use also has to be open source. So it's kind of like a more defensive approach that you take. Um, so that's why Vitalik has changed his now kind of mind and said that like actually GPL enables us to have guarantees that even the future works which are derivative will also be open source, unlike MIT where at any point of time you can make it closed source in the future. So I think eventually having some form of a software license, which basically says if you create any revenue generating product and you use us as a dependency, like you should have your own graph and you should channel some of that revenue back to the dependency graph. I think that's kind of the more longer term systemic answer, like creating a wholly new license category, saying that if any open source repo is earning revenue, they should channel it back to their dependencies.
Mhm.
And that's like enforced at the licensing level.
Okay, so let me try to play this back. Let's see if I can do this. So the challenge here is, how do you give people something in return for funding deep funding or funding their public goods, funding their open source dependencies? without compromising the neutrality and the roadmap of your project? It sounds like the short-term answer is to give them synchronous time. You should be talking to your users anyway. And then the longer-term answer is to create a new category, uh, similar to copyleft insofar as it enforces downstream dependencies. Let's call it copy deep funding left or something like that. We're gonna have to come up with a better meme for it, but basically enforcing that any derivative works will flow value to the dependencies. Anyway, TLDR short-term answer is talk to your users, give synchronous time, and long-term answer is a new category of licensing that guarantees that the funding goes to deep funding, or some funding goes to deep funding.
Yep. Yep. That's like my latest thinking on it. Yeah.
Yeah, and that'd be fascinating, sort of like if you can enforce that future dependencies or future forks of your open source software flow to deep funding, then there's almost like sort of a natural fractal growth pattern that flows money back upstream that could become really beautiful there if it's actually enforced and followed completely downstream. And I think it's beautiful. It sort of leverages the forkable structure of open source software, and then the upstream guarantees that you get from deep funding to make sure that we're actually funding our dependency trees guaranteed as the network emergently grows. I think there's
Mhm.
something beautiful about that. I'm almost, I'm like tickled in my brain to try to come up with a growth animation or some sort of visual of it, but I think it's actually very beautiful because it leverages the network structure.
Yep. And I think there's enough academic research which shows that voluntary taxation doesn't work, which is currently the system that we all exist in. It's a voluntary tax system. And once it's at the license level, like if you don't flow your value back to your dependencies, you can basically be like penalized for it. So it no longer becomes a voluntary tax system, which we already know doesn't work.
Yeah, when I did my most recent episode with Vitalik in December 2024, I think he talked about an emphasis on voluntarism and moral. No, I want to put words in his mouth, but I think it was something about cultural moralism and like norms and stuff like that. The more that we can create enforceable agreements, then the more that we can just bake these things into the root of our economic system, and it's much less fragile than cultural norms would be. Um, but it feels like up until now, that's sort of eluded us because we didn't have provable ways of saying what project is worth what. And so completing the loop that we talked about earlier enables us to build it more further into our infrastructure.
Yep, I think that's spot on. And I think like a lot of projects which are generating revenue, like I mean Lido or Uniswap or Aave, like if they are using some key dependencies in their product, I think like they would be happy to flow some of that value back, especially if it's saving them time and it's like a requirement for them to do that in order to use them as a dependency. But I think that's like a very big cultural shift. Like, can we even call it open source if like you have to pass on some of the value that you create from it? Or is it not
Yeah.
open source? I think those are some of
I
the
think
questions,
we
tricky
need a
ones.
new meme here. I mean, I think that like all this stuff is beautiful. But I think that one criticism of it that I've heard is that it's too complicated, and every time I try to follow what Devansh and Vitalik and Owaki or, whoever are talking about, then I get lost, and I wonder if, similar to how Stallman created free software, and then there's this meme of open source software that things sort of are rallied around, what's the new version of copy left, copy upstream funding, deep funding that we can create a new cultural selling point around. And I think that once it's seen as simple and the implementation details, the chords are sort of hidden in the back, that's the next part of movement building that I get really excited about. Anything more to riff on here? Because I got a couple questions as we zoom out and
Yeah.
start to get to the back half of the episode.
Yeah, maybe like the part about how we plan to solve the two problems in deep funding, like the Sybil issue and the kind of fresh
The
fruit
fresh fruit
gets
getting
rot.
rotten.
Yep, the fresh fruit
Yep.
getting rotten. So maybe like what
Yeah,
we are planning with it.
let's spend 5 minutes on that. Go for it.
So I think so I'll start off with kind of one important aspect in prediction markets in general is getting what's called a good base rate. And I'll give you the example of file RPGF. So in file RPGF, they had like a prediction market saying, will this project be in the top 10% recipients in file RPGF? And the biggest mistake that was made was they started the market at 50-50. So there's obviously no way that every project or a project has a 50-50 chance of landing up in the top 10. So what Clement did, like he's the CPO of Kleros and like Seer, which is a prediction market, he just went and bought no for every project until it came down to 10%. And he walked away as the richest and the most profitable trader in that trade, because and he didn't even
That's a
look at
low
any
liquidity
project.
market. I mean, that's
Uh
such a low liquidity market, the ARB,
yeah,
that you can just go in and buy no
yeah.
because, that's interesting.
Yeah. No, I mean, like, it wasn't just about liquidity. It was that the base rate was flawed. That the
Right.
base
Yeah,
rate
yeah.
was, so if the base rate had started at 90-10, then he wouldn't have been able to make this like arbitrage or this money. So basically, like, if we assume that liquidity is going to be low, which is true for like the majority of prediction market ideas, then the most important thing becomes like obtaining a good base rate. Because if you don't obtain a good starting price for the market, then you're going to have some form of MEV on your prediction market to exploit that and like get a more accurate base rate. So that's kind of like the precursor to it. And something which Vitalik kind of suggested a long time back, but I kind of said that, yeah, we like let's ossify and like think about it later, was he said that he felt that a more elegant form of deep funding would be that every project is its own prediction market. So rather than having a CSV which people upload saying these are all the projects and these are the weights, every project actually is its own market that you can buy and sell. Kind of he felt intuitively this was like a better design, but I said, let's finish the pilot and then kind of like, look at other design changes you want to do. So now we've actually reached that phase. Like we finished the pilot, we can actually think about what to do. And we've got all of these amazing weights between the projects. So kind of like the next phase of deep funding is that we will be using the weights we've got as the base rate, which like I said is super important to eliminate arbitrage and MEV and other things. And people can then buy and sell based on their prediction of whether something is overweight or underweight. So for example, in the weights that I showed you earlier, Prism had like 6.3% and Nethermind had 3.5%. So as someone who wants to make money, I basically would go and I would sell Prism so that it comes down to maybe 5%, and I would buy Nethermind so it comes up to 5%. From 3.5 it reaches 5. So it's kind of a very simple way of like letting like the market pool its intelligence together and also make money at the same time from it. So that's one part of it, that we use the base rates we get in the deep funding competition to launch a prediction market for every single repo, and then people can buy and sell based on whether they think it's overweight or underweight. So that's kind of
Mhm.
one part of it. The second part is how we actually resolve the market. So here we would have like I think uh, kind of it's a distilled human evaluation. If I have to frame it properly, that kind of we can't have evaluators judge every single repo. That's kind of too expensive to do. So instead, what we do is we have the evaluators only judge a few repos, and the repos which they don't judge, people can get their money back in those. So assume that I've bought Nethermind from 3.5%, I bought it up to 5%, but an evaluator does not actually look at Nethermind and give a rating. So I end up just getting my capital back. But for Prism, I've sold Prism, so it comes down from 6.5% to 5%. An evaluator is like randomly assigned Prism to go and look into it, and they ascertain the weight as being 5.5%. So what this means is that I've made money from 6.5 to 5.5. I've made money, and I've lost money on all my buys from 5.5 to 5. So you can actually like I think like we have such incredibly sophisticated tools for price discovery in the financial world. Things like longs and shorts and perps and like arbitrage, but and like the regen world really suffers from price discovery. Like we actually can't do good price discovery. So it's really like a question of how can we apply the tools of the financial world, which have a long history and are very sophisticated, into the tools of like the grant world and the capital allocation and the regen world in order to actually get accurate price discovery between repos. So that's kind of
Mhm.
in brief. Like we are still thinking through a lot of the details, but this is kind of the broad direction that based on the outcomes of the competition, we are going to be launching a prediction market where you can buy and sell different repos and the weights they have. And random evaluators can come and give a judgment on it. And that's going to determine whether you win or lose money.
Got it. So, it feels like the enhancement here is adding a prediction market on top of deep funding, and the way that this solves the numbers getting out of date is that it gives you an ongoing estimate without running the deep funding experiment. Is that right? Yeah. Okay. For the audio listeners, Devansh just gave me a thumbs up. So on the right track there. And then with respect to Sybil, um, have we solved the Sybil issue, or did I miss that answer in your answer about the prediction markets?
Yeah, so I think we would need to wager some amount of money in order to change the weights up and down. So let's assume
Okay.
that as Prism, I go and tell my community that, hey, go buy the up shares of Prism. It increases our weight and we'll end up getting more money in the mechanism. Um, but basically now what's going to happen is the community is going to buy the up shares. Arbitragers and bots are going to come and start seeing that it's overvalued and they will start buying the down shares. So basically, your community's money is leaking to arbitragers and bots, which will bring it down. And even if it doesn't leak, even if bots don't come because the market isn't developed, a random evaluator can come, a spot check can be triggered, and an evaluator can come and give the true value. And basically, your entire community has just lost money as a result of you
Mm.
trying to tell them to buy your shares. Um, so I guess it's kind of solving that problem which Vitalik had flagged about QF, that it all determines on disciplining the crowd based on how well you can discipline your community and get them to rally support. You get that much money from the mechanism. But here, even if you discipline your community and tell them to buy up shares, either either arbitragers and bots will come in, looking at a profit-making opportunity, or an evaluator will come and give a true judgment, and your community will lose money because of that. So,
Hmm. Got it. So basically, info finance is the way that you balance the incentives between the principal agent here, and you prevent people from collusion attacking it. I guess just to play back the civil, the Sybil problem, though, in my interpretation, was basically if I'm building the AI agents for deep funding that are evaluating the dependency graphs, why don't I just spam in 1,000 different AI agents? Um, in this in this world where we are basically using info finance in prediction markets to solve that problem, is the assumption that like they have to buy at least like some of the buy shares for each of the AI agents in order to submit that agent, and that's how you solve the Sybil problem.
yeah, so I think in the existing version of deep funding, we solve the Sybil problem through proof of work, where every submission has to have a write-up on the ETH Magicians forum. So if you submit 1,000
Oh,
agents, you need to do 1,000 write-ups, which is not easy. It's proof of work. But with
yeah.
the kind of change to a prediction market, it becomes a proof of stake, where you actually have to put
Mhm.
money for every prediction that you're making, which your agent is making. So I guess that's the
Mhm.
biggest change in how we are solving it.
Got it. Okay. Yeah, it feels like that aligns the incentives of the agents there. Okay, so we just played back how we're going to solve the Sybil problem, or I guess the best candidates for solving the Sybil problem and the ongoing drift that comes with these issues. Anything else to say on that before we zoom back up the stack and start moving to closing?
Yeah, the relevancy problem, and I think there are two parts of it. One is that how can we make how can we if we as the regen space and funding mechanisms and all of that, if we actually want to appeal to a wider audience, we have to create avenues for people to win or lose money based on kind of how they participate, and that's something
Mhm.
we haven't seen happen so far. Like um, even Gitcoin, for example, doesn't allow you to ask for donations in lieu of a token. It's supposed to be purely altruistic. And I think you've spoken about this, Avaki, the beauty is if you can combine regen and degens together. So actually having one part, which is the price discovery part, where people can make and lose money, and the other part, which is the efficient capital allocation part, where we can use the price discovery to actually allocate capital better in the appropriate form of credit. I think that's really where we should be heading as a space.
Yeah, I mean, I think the meme should be it's not regen or degen, it's regen and degen. It's kind of like yin and yang and how they reinforce each other, and they're just two different sides of the coin. So, I think that the big unlock for me, the category unlock for me, is using info finance to solve for regenerative ends. So, in what ways in which we're planning to fund our public goods and to build bioregional finance and to do better capital allocation, can we leverage info finance? And it sounds like the answer is doing price discovery and using info finance in order to find better price discovery, but there's profit motive along the way.
Yep. And we do like distilled human evaluation along the way, that if we all
Yeah.
want evaluation in our mechanisms, but evaluation is super expensive. So this is a way to kind of scale evaluation where a few evaluators keep the market honest, and then the market is the one determining the weights between people. So that's the other side which we've been trying to solve. Even in the regen space, we've really been everyone talks about impact evaluation. And this is kind of a very concrete way of how we can scale that.
Any other insights or learnings that, if we were to mine your and Vitalik's brain here, that you would bring to mechanism designers about the frontier of mechanism design?
Yeah, I think like the biggest question is just like how we can start bringing like all the tools of finance into like mechanism building. So that's really like I think the frontier now. Like how like we already have this super well. Like look at Robinhood, right? Like they are selling stocks like US stocks in Europe, and they're making it like 24/7, and somehow they can still make sure that there's not a big price arbitrage between like the selling that's
Mhm.
happening in their app and the actual stock market in the US. And
Right.
that's like, it's very sophisticated and like kind of difficult to do. So how can we actually build off all of that work to actually create like a new funding mechanism is something that is kind of is
Yeah.
something which is the frontier. And the other part is on how we can actually create like a lot of people talk about AI agents to take part in prediction markets, but there's actually not a lot of things happening there right now. And I think that's also where a lot of the alpha is. So I'll end with a last very interesting story, which is Robin Hanson and Gabriel from Gnosis AI. They had a bet where Robin Hanson told Gabriel that I bet your AI agent can't make any money on Polymarket. And Gabriel,
Mhm.
being an AI person, is like, I'm going to prove you wrong. I'm going to make an AI and it is actually going to like make money on Polymarket. So he then goes, he makes an AI, he launches it on Polymarket, it starts trading. And it's still early. Like he said, it's making some money. But maybe his most interesting insight is that the main determinant of whether you make money or lose money through AI in these prediction markets is the time of entry. Um,
Mm.
so it's less about whether your AI can predict the accurate outcome and more about at what point did it enter the market. So if it's like a highly volatile prediction market, then if you enter at the top, then even if you were right, your payoff is much lower. So that
Yeah.
kind of sucks.
That
Um,
that makes me feel like there's gonna be a premium on generalizability of these AI agents, like basically being able to hop from market to market, understand the question, understand the evaluation criteria, do research, and then time the entry into that market sooner rather than later.
mm, yep. And also
Yeah.
like predict what the entry is good. And once it reaches that point, then to go. Which is why Gabriel said that the markets that we should evaluate in like in this mechanism, which we don't have a name for, by the way. I'm not sure if deep funding is the right name, given like the new direction. So even if you have name suggestions, please get in touch. So
Yeah.
the kind of other thing he said, so he's saying that's why we should look at volatility. If a prediction market is like if a market for a repo and its weight is very volatile, it means the market itself is unsure of its value. So we should probably have a human spot checker go there.
Yeah, it feels like we're kind of in the category of info finance funding. It's using hedge fund type techniques, but for good, for the regeneration of the planet and for
Yeah.
funding open source software, which I feel like is, it's quite elegant. It's kind of
Yeah.
interesting.
Yeah. And I guess like
I
the
feel
one thing which I want to ask you, like, so I've been getting conflicting reports about whether we should try to get a percentage of the trading fees and route it back according to the weights of the market. But like some people have very strong reactions against that, like Clement, who said that all of these traders are helping you. They are like a consultant who are helping you figure out the right weights. So you should be paying them money in the form of liquidity incentives. Like even Polymarket does 1.5 million in liquidity incentives even today.
Mhm.
So But like on the other hand, it becomes a very neat circular mechanism where the more agents take part and are trading, the more you actually, the more you also end up funding the repos from that. So that's maybe one of the
Mhm.
things that we are debating about right now, that like, should we try to make it fully circular, that like the some percentage goes to funding the repos, or do we just like kind of figure out other funders who can use these weights to allocate to their dependencies, and we try to incentivize more and more people to join the market,
Yeah.
and we don't charge them any trading fees. Yeah.
It feels a little bit similar to me to basically the gas markets in Ethereum, where basically like if you have too much demand for block space, then the gas prices go up and then that meters down the demand, the consumption, I mean. And it almost feels like if you've got a market that's like too illiquid, you want to have like a better or you want to have better incentives for people to enter that market. But then if you've got too many trading it, like you could almost have like a burn mechanism similar to EI 559, and you could create like sort of like a dynamic S curve that the market goes up and down on the basis of how much demand there is for that market would be sort of my trade-off between that design space just off the cuff. But I think it's an interesting debate. I think another vector that I would look at here is like, how are you actually funding the money that's going into the top of deep funding? Where does that money come from? And also, how are we paying the builders of the mechanisms along the way? I mean, right now, the short term answer is that the Ethereum Foundation has a multi-billion-dollar treasury, and so they can be the kind of whale that subsidizes everything. But if you don't have that kind of money, then I think having money going upstream to the mechanism builders is something to solve for here. So it's definitely a multi-dimensional design space, and those are my two sort of things that I would apply to the problem.
Yes, I think on how to fund the mechanism builders, we are basically going to hard code the weights of the mechanism builders itself at 1%. So like whatever money is sent, like 1% is hard coded to the actual people who built the mechanism and make it run, and other and things like that. Um, Another second of how we can find the people to actually use these weights and fund it. So some of the interesting directions we are exploring are Lido vaults. So Lido's V3 version basically is like Lido's main play at decentralization, where even if they control more stake, it doesn't matter because it's fully decentralized into different vaults. And the vault owner can programmatically decide how the yield should be used, which they are earning. So the vault owner can say, hey, this is like a meme coin fund where any yield earned is going to be yeeted into like the hot meme coins, and we'll hopefully get like 100x along the way. Or a vault owner can say that like this vault, whatever yield is earned, is actually going to go into funding Lido's own dependencies. So you can actually then stake based on values rather than things like kind of diversification. So currently, when you're deciding where to stake, you're like, let me diversify, and like, but I think we should move to a direction where we actually stake our ETH based on our values. And that's kind of what Lido Vaults V3 enables. And the other part is just like, even like revenue generating projects like Uniswap can say, okay, these are the 300 dependencies we have. And then they can like pull up the value of the up and down tokens for those 300 dependencies. And boom, they automatically have weights between all of them, which they can
Mhm.
allocate, which are changing in real time as well. So I guess
Yeah.
those are just some of the directions we're thinking.
That's cool. I mean, I feel like the other lesson as we're pulling out lessons from this episode for me is to basically align your profit centers and your cost centers at a very granular, high resolution way.
Mhm.
It feels like that's the big unlock here alongside the info finance using AI traders to fund or to create better mapping around regeneration. Like that feels like the other big lesson for me here. We're getting towards the bottom of the hour here. In fact, it is the bottom of the hour. Can you go for like 3 more minutes, Devansh?
Yep.
Is there anything I didn't ask that you want to say as we wrap up the episode?
Yeah, maybe I'll say like how I got involved in this mechanism and how I could also enter the EF. So I was working on Voice Deck before that, which was outcome based funding, and we launched our product and we like kind of talked about it. And I basically then I was tweeting every day along this journey of building, and I tweeted about how I want to use AI for quantifying impact and impact evaluation. And that's when Vitalik got in touch and said that, hey, why don't you just come and start like, and I've been thinking about this for a long time. And we brainstormed over the period of like many days. And after that, I just began working on it. Like, there was no like reward or incentive or anything discussed of that sort. I just tried to bring together everyone saying, hey, there's this new idea, and I just tried to make as much progress as we could. And then 2 months down the line, Vitalik asked that, hey, do you want to come and actually lead this stuff formally at the EF? So I think the last message I would give people is like, just go do things if you can, and like, don't worry about uh, um, kind of how you're going to be rewarded for it. Because I think if you actually show momentum and you're able to make good progress, like eventually, and you're able to write about it, like, so show good progress and like actually also show that you're making good progress. Uh, and think like things eventually find a way of coming back to you. So that's maybe the last thing I'd give as a message to people hearing the podcast. And like,
Yeah.
please take part in the deep funding competition and submit an agent. Yeah.
Oh yeah, for sure. Could you give us some specific call to actions there if you're looking to contribute to deep funding, what skill sets are you looking for and where can people go in order to figure that out?
Yep. So I think the first thing to do is try to join our Telegram group. So if you go on deepfunding.org, you can see the kind of the Telegram group listed there at the end. So maybe the first step is like join our Telegram group. The second is, if you're an AI agent builder, definitely submit a model and see what weights you get, and do a write up on ETH Magicians. We've already finished 3 of the competitions, and we've already given out like maybe 20, 30K in prizes. So it's also a good way to really test your machine learning chops. And if you're someone who's knowledgeable about open source, then you can also sign up to be a jury member and to actually be an evaluator. And that's maybe the third way that you can help out, like actually being an evaluator. And yeah, we are also looking for people to actually help build out these future versions that we see these mechanisms evolving in. So maybe that's the last call to action, that if all of this has interested you and you actually want to try out building all of these things, just like we have a GitHub repo, deep_funding. So you can just start contributing to our GitHub repo as well and work with us there.
Do you think that y'all stay focused on open source software for the foreseeable future? Is there anyone who's working on dependency funding for scientific contributions or for artistic sampling or any other dependency trees out there that people are working on or that you want to see working on, or is that 18 months out or more?
Yeah, it's actually something I heard from, like, so the Aave team basically recruited a lot of their core members from ETH Global Hackathons. So, like, ETH Global Hackathon should be considered as a dependency of Aave because they've helped them do recruiting of their core members way early on. Um, I think the harder part is that, like, you have multiple sources of truth. Uh, like, unlike GitHub, which can be like a single source of truth. That's the
Hmm.
complication. But I definitely see like this mechanism evolving, like, because it's basically you're scaling up human evaluation, like that's the core of it. And that
Yeah.
evaluation can be for software, it can be for events, it can be for journalism, for scientific research, for anything really. So uh, I think eventually, if there's a very impactful paper trying to see how much credit each of the citations has. I mean, that's like a cool experiment in, like, particularly in the scientific realm, because right now every citation is like equal, but that's not the case, right? Like, some papers you cite are way more important than others. So being able to bring in that sort of granularity in like academic papers and research, I think that's kind of another cool application as well.
Yeah. Feels like there's multiple billion-dollar opportunities to just take deep funding and apply it to other dependency trees out there. All right.
Yeah.
Little alpha leak for people who stayed to the end of the episode. Thanks, Devansh. Always great to talk to you.
Yes. Yeah. No, always good to be on your podcast. Yeah.
You just heard from Devansh Mehta. I'm excited about deep funding because I think it's a frontier experiment in how we use info finance to fund the public goods, and it unites the regens and the degens, the financiers and the public goods focusers on creating a better future, on allocating capital better in the next internet. So I think this was a fun episode, and thank you for listening. Again, this podcast features the people who are building the capital allocation layer of the post-AI tokenized internet. This podcast episode is for informative purposes only and is not financial advice. Do your own research. Do not make any financial decisions based off of these episodes. In addition, disclosure, I own crypto assets like ETH, DAI, USDC, and GTC. All right, Devansh, thanks for coming on the episode. Listener, thanks for listening, and see you on the next one.